Doug Flynn joins us, certified financial planner, co-founder at Flynn Zito Capital Management. Talk a little bit about stocks, maybe even about bonds. I give the headline from the bond market. The biggest two-month rally in decades rescues beaten up bond markets. So, when the bond price goes down, the interest rate is going up, and vice versa can be true. The bond price moves in reverse to the interest rate situation. So let's talk about it. Stocks or bonds? What do you think heading into 2024?
Yes. We like stocks, but we love bonds. And part of the reason why is because the stock market is at or near its all-time high. And so you have to tread very carefully when you're buying things at the high. If you look at the bond market, it just came off of the worst 2 years in its history. It was down about 20%. Now, it has come back about 9% in these 2 months, and that's true. But what that tells you is it still has about 11% to go. And in the bond market, that's a lot. So we like things that are a little bit off and are trending in the right direction. So bonds are looking good. And if you add in lowering interest rates next year, that could be an even bigger plus to that.
Okay,
so
fair enough.
That's why we love that.
I don't think we talk enough about bonds in general. The stock market gets all the attention, so a little love for the bond folks today. A couple of other business headlines, Doug, to go over with you. One involving Mark Cuban. It's official now. His sale of the Dallas Mavericks, the NBA basketball team, has been approved to essentially the Adelson family, Sheldon Adelson and family. Dumont family is part of that, and they, this is gambling in Dallas in, I guess, more ways than one. But the idea that you marry a family known for Las Vegas casinos with Mark Cuban and the NBA. What does this tell us about where the whole thing is headed?
It's interesting to me because, the whole point of owning a team is to have the fun of owning a major sports franchise.
And he keeps
so that's the point. Like he's able to take his cash out with what we've talked about before, basically a pretty okay rate of return for the 20 plus years he's owned it. But now he gets to take that money and do something probably that will make him even more money than owning the franchise would. But he gets to keep all of the fun. And so, that's a wonderful deal for him. And I think the fans would appreciate that because of how engaged he was since he was involved. So that's the win-win there. We are dealing with the 35th richest person and the 5th richest woman, technically, that's taking the interest here and taking the ownership. So obviously they've got deep pockets, and hopefully they can improve how they've been running lately for the team.
Yeah, and I would think they want to work, and sports and gambling have always gone together, but now more in the open than ever before. So maybe there's some sort of a marriage there that works. But you're right, you never see this because the agreement for Cuban is that he can still run the basketball team. I don't ever remember. Maybe it's happened before, but I don't ever remember seeing a deal like this. Do you?
I think it's unique. I have not seen anything like that. And you're right. I think the next leg of everything as legalized gambling comes across, perhaps even into Texas, and if not, there's the other places that can take advantage of it. And that's where they made all their money, this family, with Las Vegas Sands. So it's going to be interesting to see how they continually kind of meld that together. All
right. Last headline involves Amazon. And here it is. Amazon is to show ads in Prime Video content starting January of 2024. Bottom line on this, Amazon Prime, if you have it, $8.99 per month. If you want to have it with no ads, you want to watch it with no ads, you got to pay another $3 a month, another $2.99 a month. And this is kind of interesting because I think a lot of people were thinking, I'm already paying a decent amount for Amazon Prime. This is one of the perks, but Amazon says, no. You'll be willing to fork over another $3 a month for no ads. What do you make of it?
Yeah, I think the $8.99 is if you don't have Prime. That's the straightforward. Right. So if you get that part for free if you are Prime, but they do want to clip that extra $3 from you. But what I've started to see, and probably everyone else has, is that whether it's Netflix or Disney Plus, Hulu, Paramount Plus, Max, they've all gone to this sort of dual model, which is we'll give you the ad version for a lower cost and the ad-free version for a few more dollars. And so, personally, when Netflix just recently raised to the point where it's going to be over $20 a month, I was like, you know what, I'll take the ads.
Yeah, you watch a few ads. But what's funny about this, and you're right, the way it is, if you didn't, you would have to pay $8.99 if you didn't have Prime. But what's funny about this is people that they're already paying for Prime, which is a lot more than that, and they probably figured the least you could do is cut out the commercials. So it's funny that they're hitting those people with it.
They bought MGM last year, Amazon, so they bought that library. They want to keep investing in content and new development, and that's where a lot of this money is. But if you think about it, they're sort of getting from both ends now. They're getting the ad-supported revenue, and now they're getting the additional subscriber cost. And if you look at the rate of raises on all of these, it's much higher than the rate of inflation. So at some point, like everybody else, it's like, how many of these can you possibly have every month that you're paying for? I don't know. I've hit my limit for sure.
That's true. But we probably shouldn't sit on cable television and criticize the dual revenue stream, because that's sort of the business model. So, that would be a little hypocritical. All right. Thank you, Doug.
Good point.
Great stuff as always. And Happy New Year to you. Doug Flynn with us.